Despite banks promoting that security you want for your finances, banks are still money-making businesses. The more clients they have would definitely earn them profit, and there are things you are not supposed to know. If you're interested to know about these, then stick around because we've prepared something just for you. But before anything else, please hit that notification bell and subscribe button to know more videos just like this one. Welcome to Fortune Figures. Here are the top 10 banking secrets they don't want you to know. Number 10. Credit unions may offer better rates on loans. Banks and credit unions aren't the same, but they seem similar because they use the same language to talk about what they offer. The good news is that there are enough differences between the two to tell them apart. Credit unions typically offer lower fees, higher savings rates, and a more hands- and personalized approach to customer service to their members. In addition, credit unions may offer lower interest rates on loans, and it may be easier to obtain a loan with a credit union than with a larger impersonal bank. Banks will likely provide more services and products, as well as more advanced technologies. You will need to take factors like these into consideration in deciding which type of institution will best serve your needs. Number 9. There's no such thing as a free checking account. As an initial matter, what is called free checking isn't really free. Free usually means free assuming certain conditions are met, such as direct deposit, maximum number of transfers, minimum balance, etc. This is because checking accounts are a part of a bundle of consumer financial services that can be priced in lots of ways. There can be an upfront fee and no additional fees, or there can be no upfront fee and lots of additional behavioral contingent fees and every variation in between. Number 8. Depositing a bounced check can cost you money. Did you know that bouncing a check can result in an overdraft, NSF and merchant fees, and even criminal charges? A bounced check penalty from a bank can cost around $35 in the form of non-sufficient fund fees. A bounced check is one that is returned or bounced to its original bank because it's not in the check writer's account to process it. This can lead to a number of fees and probably some headaches. One so-called rubber check could end up costing $65 or more for overdraft, non-sufficient funds, and or merchant fees. If there's a risk you won't have the funds to cover a transaction, you're better off not writing a check for it. Consider whether late fees might be the less expensive option if you can delay payment. If you don't pay the amount of a bounced check within the time frame your bank specifies, you can close your account. Number 7. Savings account rates can change overnight. High-yield savings accounts have become a popular place for consumers to stash their cash because they offer higher interest rates than traditional savings accounts. But if you have a high-yield account, you may have noticed your rate fluctuates. The APY on a savings account is variable. This means that an account's APY can go up when the economy is doing well and Federal Reserve raises interest rates, and it can likewise drop when the economy weakens and the Fed lowers interest rates. In short, the rate you sign up for is not guaranteed forever. While lowering interest rates is good for borrowers, it's not so good for savers, and this is something you would want to consider in opening a savings account. Number 6. Deposits aren't always available right away. In some cases, when you transfer or deposit money via online, it can take 3, 4, or even 5 days for the money to show up. Each bank or credit union has its own rules about how long it takes to deposit a check. Federal law states that banks must make funds available in a reasonable amount of time. A bank may choose to hold a check longer if it is an unusual deposit, if you've never deposited a check from that payer before, if the check is for a large amount, or if the check is from an international bank. The latter requires a much longer hold time because it can't be easily verified. Hold times for these checks depend on your institution, so you should check with someone about the policies. The bank may be likely to clear checks right away if you have a consistent history with a certain payer. Say you're a freelancer and receive checks every other month for work you do for your company. Number 5. You may be liable for fraudulent transactions. According to federal law, you are protected against charges made with your permission if there is an unauthorized transaction when someone transfers money from your account or when you immediately report a lost or stolen credit card before someone else uses it. However, if you report the card after fraudulent charges are made, you might be one at the hook for at least some of the money taken. If you wait up to 2 business days to report your card or lost or stolen, you may be responsible for up to $50 of the transaction. If you wait for more than 2 days or up to 60 calendar days after your statement is sent to you, you could lose up to $500. Number 4, you don't have to opt in to overdraft protection. Overdraft protection is an option offered in a bank account that prevents check, ATM, or debit card transactions, as well as wire and electronic transfers, from causing the account's balance to fall below zero and triggering an overdraft fee or a non-sufficient fund. With overdraft protection, a bank will cover a shortfall and charge for the service with an overdraft fee or courtesy fee so the transaction goes through successfully. You can avoid paying overdraft fees when using your debit card for purchases and at ATMs by not opting in, or by opting out if you're currently opted in. Number 3, you should keep your receipt for ATM transactions. Many people choose not to receive a receipt from ATM transactions since they just end up as scrap paper or crumpled at the bottom of a bag. But it's still a good practice to keep your ATM receipts, at least until you verify the transaction has been posted and is correct. In that way, you are able to keep track of your account and any malicious withdrawals that are taking place. In the end, you will be able to truly appreciate the real benefits of thermal paper for receipts. Number 2, banks can pay themselves back. Although we all use our bank accounts daily, most of us may not know how banks actually work. Well, you better believe banks are a business, and profit is their top priority. The 2 main offerings banks profit from are interest on loans and fees associated with their services. Basically, banks don't turn a profit until they have your money, so attracting and retaining clients is key for a bank institution. This is why they offer sign-up and referral gifts, waive fees for direct deposits, and provide benefits to high-value clients. Like any business, banks have expenses and revenue streams that they strategically leverage in order to grow. And last but not least, number 1, the more you swipe, the more they earn. The primary way that banks make money is interest from credit card accounts. When a cardholder fails to repay their entire balance in a given month, interest fees are charged to the account. Every time you swipe your card, whether it's debit or credit, the bank is making money from charging the merchant certain fees. Promotional credit card offers will often want you to spend a certain amount within the time frame in order to be rewarded. Although it's a great deal for you, they are doing that for their benefit. The most you spend swiping your card, the quicker the banks make their money back from rewarding you. The second largest source of income for credit card companies are fees collected from merchants. When a retailer accepts a credit card payment, a percentage of the sale goes to the card's issuing bank. This is commonly referred to as the interchange rate, which will vary from card to card and retailer to retailer. Alright, that's it for today. We hope you enjoyed today's video as much as we do. What part of the video surprised you the most? Comment down your answers below. Please don't forget to like, share, and subscribe to our channel, Fortune Figures, to keep you posted on our latest and trendiest updates. Thank you so much, and I will see you again next time.